This is our dashboard and the best place to navigate for all of our credit reporting needs. We're just going to do a live search now, and I've prepared a couple of good examples for us to do. So first of all, we're going to look at a bad company, so one that I wouldn't want to be dealing with. You'll notice that our predictive search box is popping up there as I'm filling out the ABN. That's a really good way to cut down time when you're searching for entities. Okay, so the good part about CreditorWatch is every time that you access a report, it's gathering the information live from ASIC, the Australian Business Registry, looking at our on-file court information and all the on-file member information that we have. And it collates it in a really easy to use format that is designed for people who don't have a trained credit eye to be able to assess a company straight away. So at the top, we have these things called widgets, and they're designed to draw your eye to that important information straight away. It means you don't have to look through a 15 or 20 page report to get the information that you need. It should be all a snapshot right at the top. All of these boxes are clickable, and if you want to go straight down to that section, it will zoom you straight down and expand the section for you. Also, while we're at the top, I'll just point out this monitor for changes button. If this was an entity that you wanted to start dealing with on a regular basis, click that monitor for changes button and it will alert you to any new adverse information that comes through or company changes that comes through the monitoring. Below our widgets, we have a giant red risk box. So if the widgets didn't provide enough insight, any entity with this red risk box is someone you should be spending a little bit more time looking at their credit report. The design of this is really for the purpose of skipping over those entities that don't have adverse information. It allows you to verify the ABN, ACN and the directors and move on. And the ones with the red risk box, you want to spend a bit more time with and really decide, do I want to be doing business with this entity? Or how about let's do business on a COD basis first? In the summary information, we look at Australian Business Registry and ASIC data. And this is publicly available information, but it just compiles it in an easy to read one-stop shop rather than looking at the two different agencies. And what I'm looking for here is to validate the ABN, the ACN, the main name, and also looking at how long the entity's been around. So you can see the incorporation date of the entity also. It also tells me what type of entity it is, and the important part around that is that a company is typically less risky than a sole trader trust or partnership. So I'm starting to paint a picture in my mind of who I'm dealing with and how risky they are. We also have a credit score available. I'm just going to purchase one now. Now you can see that that has obviously updated in the system and it becomes a lot live immediately available for you. This credit score is currently at 1 and it's pretty much the worst you can have. It's a score out of 850 and takes into account payment and risk information. So the risk information looks at things like the industry, the directors, does the director have any adverse information, how long the entity has been around, the entity type, and a whole host of factors. And it'll also plot it against an average for you. So you're looking to deal with companies around or above that average. We also give you a risk of failure score. This one is critical because it's in under an external administration, but it gives a percentage to failure, which is an additional point as well. My favourite part, and I think the most important things about the scores, is that historical trend. So when I look at this, I'm looking for trends in the score to see whether it's getting better, worse, or staying the same. So this obviously has declined significantly over time, and as you'll see in a little bit, that's predominantly been due to adverse information being put on this company's credit score. But you will see industry changes affect the credit score, entity status changes, etc. will also feed into that. So if it wasn't a warning sign in December that this entity was below the average, you can see over time it's been decreasing in a pretty consistent and non-favourable manner. Okay, so now we're going to look at some adverse information. The first thing you'll see is court information, and this is entities that have been taken this company to court. So it'll give you the date, the plaintiff, so who the company is, the amount that has also been registered for. Now, something I just want to get you to notice here is the first court action was lodged in March 2017, so that's important just to keep in mind. It's also for a very significant dollar value. We then look at payment defaults, and this company has quite a host, but what you'll notice is the payment defaults actually started coming in late 2016. So this means if you are monitoring this entity, you would have seen multiple invoices for a fairly significant dollar value appearing over time as this company started to deteriorate. So if I got those defaults coming in, I would see that as a big warning sign that this company was having cash flow issues. And that was significantly earlier than that court action that came through before. Insolvency notices. So the insolvency notices come from a unique registry called insolvencynotices.gov.au. With our service, you get full details of the notice for free. So it'll actually let you know who the administrator is, full contact details, name, phone number, and email address as well. So if you are a creditor, this is really important because it allows you to register your interest, but also keep up to date with any changes that's happening with the administration of the entity. Mercantile inquiries. Now, this entity didn't have one, but this is sourced from our 200 debt collectors that use us for pre-litigation work. So typically what you'll see here is that if a company is given to a debt collector, they go through their process, they are unsuccessful in recovering the outstanding amount, they will then recommend to their client that they should pursue legally a debt if it's for a significant enough dollar value, and that's when that mercantile inquiry would appear. It's after they're doing their due diligence in order to sue someone. Critical asset documents. So during the life cycle of a business, there's typically dozens of documents lodged. We pull out the important ones for you and allow you to have a look at when they're lodged and the importance of them. So they're mainly around winding up insolvency notices, that type of thing. We also pull out status changes, both from ASIC, so you can see the day that the administration went through, and also the Australian Business Registry changes, so when they're registered for GST or not registered for GST. So everything that you've seen up to this stage is available on all entities, sole traders, trusts, and partnerships included. Now we're looking at paid ASIC information. So this is for entities with an ACN, and what it really shows you is directors, their registered addresses, shareholding structure, and registered documents. So the whole purpose of the CreditorWatch Bureau is to share information, and the way that we do that is if someone buys an ASIC extract, any one of our 50,000 members, everyone else gets to access it for free, which is really important. It saves you paying what they call an on-file cost at other credit bureaus. This one obviously has it on file. It'll also note if some of the information's out of date. So you can see that there's been new documents lodged. This isn't something that I'd refresh the ASIC extract for. It would only be if really there's a director change or a shareholding change that you're probably interested in. So it means that although it's on file and slightly out of date, it's all current information in the areas that you want to assess. Now looking at director information. So here we've got the name, date of birth, and address information. A really cool tool is our Street View. This allows you to drag and drop the little man on the street where the director lives. And the whole idea about this is allowing you to see if the director, that looks like in this case, has actually put their commercial address as their residential address, which is a warning sign in itself, or if it was their residential address, looking at whether they own the property, whether it's a waterfront mansion or a small house in the suburbs. So it's all trying to decide if there's equity that you might be able to gather if something does go sour. We also look at cross directorships. Now, with the CreditorWatch cross directorships, we'll not only tell you the status of the entity, but we'll also let you know if an entity has adverse information on it. So here you can see if I click through to this credit report, and you can do that for free with your membership. It doesn't cost you every time you open a new report. This company, although it is registered and looks fine on the surface, there's 3 defaults that have already been lodged on this entity. Now, some staggering statistics around directors. A director who's had a previously failed business is 2 times more likely to have another one. Even more staggering is a director who has a previous court action is 5 times more likely to have another one. So if you see a director with adverse on their cross directorships, or they've had some previously failed businesses, it's a really good warning sign about the future behaviour of that director. Registered addresses, so it's looking at their principal place of business and registered office. Typically, the registered office will be a lawyer or an accountant, and their principal place of business will be their operating address. The shareholding structure, so who has shares in the business. If the shareholder is a company, you can actually click through and view their credit report for free. So you can actually chase things up the tree a little bit and see, okay, where does ultimately my risk lie, and what is the shape of that company. Looking at ASIC documents, so that's all the documents lodged with ASIC. So from director changes, winding up notices, etc. Previously extracted extracts, so that means 47 people have bought an ASIC extract on this entity before, and you obviously get the benefit of that being freely available. A cool little tool in here, although it's very dramatic to zoom in, is our visualization tool. And the whole idea with this is really to draw your eye to links in a business. So if I zoom out a little bit, you can see that the director here has the company address as one residential address. A really useful tool with this is if you have multiple directors that are actually in fact family members, typically their addresses will match up, and your risk is significantly higher with a family-owned business rather than 3 or 4 different upstanding directors. With a family-owned business, typically there might be one person driving the business and just 1 or 2 others involved in the business. So it's easier to corrupt family members, or even they might be silent directors in that instance. So I kind of try and assess the directors involved, how many are there, and are they related? The final thing on here is related information, so business names. So that's a bad credit report. I know we're running short on time, so I'll just quickly show you a good credit report. Now, I think a thing that you must keep in mind with credit reporting is that no information is good information. Not all entities have adverse information on their credit profile. So if you see a tick in one of these boxes, it's really important to note that that's good. Not all businesses have that adverse information. So it's important to take that into consideration when assessing credit. The final profile I'll just quickly show you is a trust. So this is obviously an area where people like to see what information is available. There's not as much information available as a company because there's no ACN information, but what you still do get a credit score. You get to look at the entity details, so the name, the ABN, how long they've been operating, and the type of entity. You're also still able to purchase a credit score on these entities, and they're a good indication of whether they sit above or below the industry average. You can see on this particular entity, it's slightly above, and that's that the failure score that we're talking about earlier, and this company is on the lower side of that failure. And that 12-month trend, this company is nice and stable, and that's someone who you want to be entering business with. There's some additional ports you can buy. We've covered some of them off. The most popular